Hi, welcome to Straightforward Real Estate. I'm Scott Gibson. I'm a Tom Ferry coach and the team lead for the Lawton team here in Tucson.
Hey, I'm Steve Dooley, local real estate expert with the Lawton team as well. Scott and I will be taking time every month to dive into the hottest real estate topics and trends on both a local and a national level.
Yeah, so we've done a few of these, so you're always welcome to go back and watch them. They'll be highly entertaining while we kind of find our way. But in the next 30 minutes, we're going to do a deep dive and discuss what you need to know about the market here in Tucson. We're going to talk about the market in general, nationwide. We'll talk about the potential for more listings from foreclosures that are coming down the pipe. And we've got some other topics on buying and selling your house in this crazy market and working with the agent that you have, or hopefully you'll be working with us.
Awesome. And before we get started, just like to take a quick second to thank our power partners over at NFM Lending and the Lawton team for helping us make this show happen.
Absolutely. They definitely sponsor the water, and that's really been helpful.
Yeah, gotta have water.
So, hey, grab a cup of coffee, a pen, maybe some Red Bull, or if you're into the Monster, then grab one of those. Call a friend and tell them to sign on. Pen and paper for some notes, and we'll get started.
All right, let's get in.
So before I know we're not going to get right into the hard numbers, but talk to me about where the market's at.
So without the numbers?
A little bit of the numbers.
Okay, in general.
Yeah.
So general, in case you hadn't been paying attention the last year, it's a strong seller's market right now. And what does a seller's market mean? It means there is a lot less homes for sale than people wanting to buy homes. Yeah. Supply and demand, right? Basically. Do you want me to dive into the numbers now?
Well, let's talk about what contributes to a seller's market, right? So, one of the reasons why I have a seller's market right now is because interest rates have been so low for so long. A lot of homeowners have refinanced, and so they have great rates in a house that they love with a lot of equity. And so they're not as encouraged or motivated, I guess would be the right word, motivated to move. And with the interest rates so low and people coming, into the workforce and employment being so strong, a lot of people are qualified to buy homes. And so that does put a constriction on the inventory. And so those are the leading causes, right? There's always some anomalies depending on the submarket or the market that you're in. But felt that was kind of important. Where are we sitting inventory-wise here in Tucson?
So, yes, inventory-wise, super low. We're down 41% from last year at this time. So just to put some numbers on it, in 2020, there was, and these are single-family residences in the Tucson MLS, 3,150 homes for sale at this time last year, which is pretty low as it is. Mm-hmm. This year, it was 1,857. So down 41%. So that's almost half as many homes available to even purchase.
So more people can buy, and we have half the inventory. So that does make the opportunities to buy a little bit more constrictive. And so we're going to talk about paying over list price, and we've got some numbers on that. Roughly, do you want to talk about interest rates yet, or we want to get into that a little bit later?
Well, since you mentioned it in the beginning, that was kind of one of the contributing factors to putting us into this inventory shortage, right?
Yeah.
Because the interest rates are at all-time lows. Now, there has been speculation that interest rates are going to rise and the market's going to turn and things like that. However, the lowest they got was probably about 2.5, 275 at the end of last year. Beginning of this year, maybe like January. They have gone up a little bit right now. And it all depends, again, on your credit score. So, of course, you'll want to work with your lender, to determine your rate. But just in general, people with good credit over 720 can get in the low threes still. So like 3 to 325, somewhere in there. If you have like a decent score in the middle, around 680 range, you're looking at, mid to higher threes. And then if you're on the low end of the credit score, 680 or below, then you're looking at high threes and low fours. So like 375 to 425. Put that in perspective. When I bought my house, my first home back in the early 2000s, 04, I had a really awesome interest rate then as well. And it was like 575.
Which was crazy low then.
Right. And so we're still at historic lows. Yes, it has gone up a little bit in the last few months. However, they're not looking at maybe going up over the threes, in 2021.
Absolutely. Great, solid information. Kind of moving forward, selling in today's market. That seems like the easy part. What are some of the tips that they can do?
So selling in today's market, well, a couple things. So in today's market, selling is the easy part.
Right.
Your house is going to sell
Hmm.
unless you're overpriced or your house is in super poor condition
Hmm.
to the prices that you're trying to sell it for.
Hmm.
Um, just a couple easy tips is obviously make sure that the home's ready to sell before you list,
Hmm.
because not only will you get offers in quickly, but you probably won't, if you're thinking about doing repairs as you list and kind of waiting. You're going to get hammered on the inspections if you don't have that stuff taken care of. So just make sure that the house is as ready as possible within your means and budget.
Hmm.
And of course, your agent can probably help you find some contractors and things to get some of that work done, the tidying up
Of course.
and that stuff. Another thing, we'll go on.
Well, no, and I think to follow up on that, you know, sellers that are moving forward right now see a lot of opportunity in the market, and so they question themselves: should I paint, or should I fix that doorknob, or
Mm-hmm.
should I do this, or should I do that? The answer is yes, and the reason is this: is that while we have an extreme amount of homes that are going into escrow relative to the inventory, we also have homes that are falling out during the inspection period. And so anything that you can do to improve your home or to make sure that it passes inspection, and this is why you definitely need to work with the right real estate agent, because they need to walk the home with you through buyer's eyes, through an appraiser's eyes, and through an inspector's eyes. It is worth $500 to have your home go through an inspection prior to listing it, correcting the items, and or pricing your home appropriately based on the inspection results, because the home's going to go through an inspection. And so if you can get out in front of it and you can prevent any of those hangups, you have a better chance of closing the transaction. Which, the title of this segment for us is, how to sell and buy roughly at the same time, because there is a lot of juggling involved. And so if you are going to go the traditional route, those are just some very helpful basic tips. Here's a good question. With houses going off the shelf so fast, should people still do pictures? Should they still even bother doing a video?
Again, absolutely. I mean, it's
Yeah.
just marketing your house properly and making sure it's in the right condition. And you just reminded me
Hmm.
of a good point to bring up is a reason to have all those repairs ready. So when you're looking at buying another home, selling your home, then buying another home on contingency, and
Of
we'll dive
course.
into that. That's kind of foreshadowing, but if your current home, if you put an offer in on another home and this home falls out because somebody didn't like the repairs or the condition of the home, now you lose both houses.
Good
So
point. That's a great point.
super bad. And right now,
Hmm.
speaking to the market as well, the fallout rate, it's a thing because buyers are under so much pressure to get under contract.
Hmm.
They're just kind of throwing up deals willy nilly and getting into contract just to get it locked up. And then they come in and they get like cold feet, or they look and they drive the neighborhood and they don't like that. Something happens, and then there's a 35% fallout rate right now. So
Wow.
all the homes that go under contract, a third of them basically are going to fall out. You don't want that to be your home, especially when you're buying another.
And especially when you're in contingency,
Right. Exactly.
right?
Yeah.
It gets very expensive, and it's so stressful as it is, right? Selling, moving, buying. So why add that extra stress when you can just take things off the table really quick?
Mm-hmm.
One of the other solutions that's out there, and we would be remiss if we didn't bring it up, are iBuyers, right? So iBuyers are large investment companies that purchase the home directly from the seller. You should still work with an agent to make sure that you're negotiating properly with them. All the iBuyers that are professional do work with the agents on the other side of the transaction, so it's very common to approach them after the listing agreement has been signed. The advantage for the iBuyer is that they're going to do an inspection on the home the same day that they give you the price. And then there's no repairs generally required. You can pick your move out date. So if you need 60 days, it gives you this huge advantage. The disadvantage is they're going to tax you on that,
Yeah.
right?
It'll be a lower offer.
Yeah, they're investors, right? They're not traditional buyers. They're not ever going to occupy the home. And so investors need to make money. And so that's how they make money, is by paying less than what the market would bear for your home. Is that worth 8%? Is that worth 12%? Because some of them get pretty pricey. That's something that you need to discuss with yourself and with your significant others and anybody that's invested in the home, and talk to your agent and say, you know, I know we can make more, but we could cash out and then be able to buy without that hassle. And it's kind of like trading in a car. You could sell the car yourself and you make more money, or you can trade in the car to the dealership. The dealership's going to give you less for it. It's no different than when you're working with an iBuyer.
Yeah.
So we work closely. Not all of our deals fit, and our team actually also has a group and part of our company that if the iBuyers aren't quite giving you the price that you want, we might be able to work with our parent company and actually get you a little bit closer to that price. And so there's always advantages and disadvantages to selling to an investor, and the equity is pretty much where you're going to lose. But the gain on some peace of mind might be that exchange.
And those are the factors. That's well said, Scott, because I've used iBuyers with clients. I'm actually in a deal with one right now.
Mm-hmm.
And it was the stress of buying a house, finding another one, and we're going to dive into that here shortly, finding the next one. But selling the home and being under a time crunch to get into a new home, if you have enough equity and you can still make enough profit on the sale of your home, even with the lower, you might make, whatever, less than you would if you put it to market, but it's the release of the stress and all that anxiety that's involved with that. And the fact that you do that and they give you like a 90-day window to close is it's really huge in this market, especially.
Yeah.
So.
It's just another tool in the toolbox of the listing agent you're working with.
It doesn't work for everybody.
Yeah, absolutely.
If you have time, then it's not probably for you.
Roughly out of 10 or 12 deals that you've got going on now, only one is going to an iBuyer?
Yeah.
Yeah. So, that's, that should give you a ratio, and that should give you an idea. You kind of gave us that lead in on buying the next home.
Mm-hmm.
What are those challenges looking like out there? How bad is it?
So it depends.
Yeah.
Right. So it can be bad.
Mm-hmm.
Yeah. Right now, two words I like to use for buyers, if you're looking to buy a home, whether you're doing it on contingency and selling your house or just in general, two words I'll give you: tenacity and persistence.
Nice.
That's what it's going to take to get you a house in this market, because the inventory is super low. We have over 1 million people in our market and 1,800 and some homes for sale.
Hey, it's still better than being in Phoenix.
True that. Tell us about Phoenix.
Phoenix is, these are just active single family homes, right? So they're running just over 4,000 for about 4 million people.
Yeah.
That's no fun.
They have more houses, but like quadruple the people shopping for them.
And we have friends up there that our heart goes out to them. But the advantage is for all of you that are watching from other states, instead of moving to Phoenix, you should move to Tucson. Better traffic, better college, right? Go Wildcats.
Yes.
Friendlier real estate agents. It's numerous reasons why.
Lots of reasons.
We have more beautiful mountains.
Yeah,
most definitely. So
enough on Phoenix.
Talk to me about new builds. Like what's the cluster there?
So basically, back to the part there where it's tough to buy a house, persistence and tenacity. Us real estate agents are basically totally looking outside the box, because we have 1,800 homes and we got somebody who needs to buy a house within a month or whatever. We're looking outside the box. We're looking at new builds.
Mm-hmm.
We're looking at for sale by owners, off market, any off market properties, basically turning over every rock just to try and dig something up to find people stuff.
Yeah.
Investors that own properties, they're looking to sell right now. But as far as new builds go, those are becoming sticky themselves, because we're not the first ones to think of, oh, well, let's get a new build, right? It makes sense, especially when people have a lot of equity in their home and everything else, or they have a lot of money saved up coming from California or whatever.
Mm-hmm.
The problem is now that the builders are all backed up.
Right.
So there are literally 0 spec homes for sale. So if you need a house within 2-3 months, forget it.
Yep.
Sometimes the builders will release like 3 or 4, and you just have to be. I did have one a month ago that we got a spec home, but we just got, really honestly, we got lucky and showed up there right when they put it up and
Mm-hmm.
got it locked up. So spec homes are pretty much out the door. And now if you're looking to build a house and you have the time to have a new construction build, we're running into the problem we did back in the day, where there's the builders are just swamped. We're looking at 12 months to build a house right now.
Shortage on materials.
Yep. Labor
is very short right now because everybody is so busy.
Mm-hmm.
And it's in multiple states, right? It's not just Arizona. And the materials, you can walk into Home Depot and buy a refrigerator, but that's not what builders do. Builders typically buy in bulk, or they make a commitment. Refrigerators, wholesale, have gone through the roof. Yeah. And
tell them about the plywood.
Yeah, plywood. So this is a meme, so I have to qualify that. But it was on Facebook. Somebody had snapped a picture in Home Depot, 4x8 sheet of plywood, just basic 3/4, was $90.
Yeah,
which is absurd. It's $16.
Hopefully that's not true.
Yeah, and I was going to try and swing by yesterday and just double check. But at the end of the day, even if it's not 90, it's somewhere in between. It is significantly more than it was a year ago, significantly more than it was 6 months ago.
And that goes into, if you're thinking about buying, I'll just buy some land, build my own place.
Yeah.
You're going to run into that issue.
Yeah, you're going to run into the issue that a concrete guy that you think that that you can work with, he's going to do your one house, or is he going to work on the contract where he's got 15 houses? He's going to prioritize the concrete that he has. Mm-hmm. Arizona, we don't have a concrete problem. We have a lumber problem. New Hampshire, they have a concrete problem. Each state is short in some fashion or another. Mm. So, off-market homes, that takes a little bit of hustle. I just closed a transaction, and we could not get the buyers into escrow, and very competitive, and I ended up having to track down a home that really matched everything that they wanted, and just did a lot of research and knocked on a door, made some phone calls. It took me about 8 phone calls, and but they closed. They closed on Monday, and that was it was a lot of work, but they got the house that they wanted.
Tenacity and persistence.
Yeah, and focused on the process, not the outcome. Right. So I didn't focus on whether or not that house was going to be for sale. I focused on the fact that I just needed to find the house, needed to find the person to talk to, and then use that tenacity and just didn't let it go. What are you seeing as far as homes going over list price?
Over list price. Well,
we pulled a cool graph for this.
Yeah.
And
should we just show it to him?
I think we could show it to him. I think we're very high tech here.
Super high tech.
Very high tech.
Awesome slide.
So Tom's our guy in the chair. Tom, how does that look on the screen?
A little closer.
Little closer?
Little
closer?
There you go.
My man. Excellent. So what you're going to see there is that 48% of the homes in Arizona, based on NAR statistics in March, sold over list price, right? And I think you can take it down because I don't even. Yeah,
the effect's over.
Yeah, I think the what you see is what you get, right? So what's the advantage there, right? What's the upside? 52% sold at list price or below. Mm-hmm. And so when you hear anecdotally, people are paying $100,000 more for this house, or my cousin didn't get a house because somebody paid $150,000 over list price or appraisal. That's true. Yes, maybe no.
On a one-off.
But that could have been somebody's cousin, somebody's cousin, somebody's cousin. And who knows if that was in truly Arizona, because statistically, 52% of homes that sold last month sold at list price or below. And that's the message you need to keep telling yourself. Because, if it's a highly competitive price point, then sure. But that's communication between you, your agent, and the listing agent. And it's again in the marketability, because I can assure you the people who didn't do the repairs, who didn't put enough pictures on the MLS, are the ones that sold at or below.
Mm-hmm.
So if you want to go above, you got to market the property. You got to be working with an agent that doesn't just say, "Yeah, we can we don't even have to put a sign up. We're going to get multiple offers."
Yeah, cell phone pictures.
Yeah, those are the deals that fall out though, and it might take you 4 or 5 deals before the market finally catches up with your overpriced home.
Right.
Absolutely.
Yeah. So let's circle that back around. So we talked about selling, we talked about buying. So now let's just dive into a little bit about the contingency. First of all, let's just define that for any viewers that may not be aware.
I'm excited to hear your definition of contingency.
All right, I'll give you the Dooley version, which is maybe not the book version. But what it is basically selling your home and then buying your home. But on the purchase of your next home, you need the cash for the down payment from the sale of your first home to buy the second home. So it's a contingency, which means this purchase of your second home is contingent upon the sale of the house you're in now.
Yeah.
So
think of contingencies as speed bumps, right? Going 100 miles an hour. When you're in the purchase process, there's a contingency based on the inspection of the home. So if things don't work out, you're able to get out. Then there's a contingency based on the financing. Then there's a contingency based on the appraisal. These are all steps that are put inside the contract that protect both the buyer and the seller, that allow them to work within those guardrails, since I'm using the analogy of the road. So when you're writing offers, one of the things that Steve's is talking about is the sale contingency of that previous home.
Mm-hmm.
Again, it's another speed bump that just slows everything down, lets everybody check where they're at. Is the home under, the previous home A, is that in escrow? Is it through the inspection period? Are those buyers fully underwritten? And, as sellers and agents, we have to understand that you could be 4 or 5 transactions deep. This person needs to sell their home so they can buy this person. Once they sell, they can buy this person, they can buy this person, they can buy this person. That takes professionalism from all of the agents to work together to make sure, because whether you're the first person or the last person, it's still people's homes. And so you have to give your full attention to that process. Contingencies are very common. They are not something that you should be afraid of. Are homes selling where people are waiving contingency? Sure. Should you do it? It depends on your risk adversity, right? It's your home that you're going to live there. If you're very handy and you know what you're looking at and you looked at the inspection, but you waive the inspection results, then that's something that's doable. But if you're not a handy person and you don't know repairs and you don't understand the difference between a water pipe and a gas pipe, waiving the inspection contingency is not something that is advisable. It's completely up to the ability of the buyer to manage the situation.
Right.
So, so we've talked about the competitive market. We've talked about the.
So how about relative to today's market? So I want to buy. I own a home, and I'm watching the market like everybody else is, and my home's gone up by like $50,000 in the last year, and I got all this equity, and I'm like, man, we should move. We should go get a bigger house for our family, or downsize, or whatever the case.
Yep.
I want to buy another house, but I got to buy it on contingency, right?
Yep.
So navigate me through that, the factors with this market for that. Does that make sense on the question?
Yeah, I think I understand what you're talking about. So there's some options there, right? So if you have a tremendous amount of equity in your home, working with the same lender that's pre-qualifying you for your purchase to refinance, pull the cash out just before you sell it. So then that way you have cash for the money down for the next house. We just did a deal just like that. It's always better just to leave the money at the title company because then it's seasoned and we all know where it came from. But, you can do that. One of the other things you can do is, use the contingency program. You could roll the dice and get yourself comfortable with a short-term rental or an Airbnb, and then sell your house outright, move into the Airbnb, and then start looking for your next home, or have that idea, because sometimes, depending on the price point, the sellers and or the listing agents aren't really working with some contingencies, but there's plenty of opportunities there.
Mm-hmm.
Absolutely.
And then, of course, the iBuyer is always an option as
The
well.
iBuyer is definitely an option.
Mm-hmm.
You know, real quick, because I think we kind of skipped over it, so forgive me for going back. How much is the appreciation in the last year?
Oh, good question. Let me pull that stat here. So appreciation, kind of crazy, 12.5%.
What was it last month?
Um,
When we had 10% last month?
yeah,
So-
it's gone up. It's gone up. So basically, they're going up about 2% per
Per month.
month. The prices here. So
Now, that'll be a threshold.
Yeah.
But the average home right now in Tucson is at
275. So
Right.
that's what's crazy. Last year, so it's 12.5% increase in price overall. But listen to the numbers that might resonate with you.
right.
The average sales price for a home in Tucson, single family, 244,000 this month last year. This month, this year, 275,000.
Which is fantastic.
Same house. So,
And that's good, right? Because it's still within the affordability index
Mhm.
for Tucson. There's still plenty of homes in inventory that'll turn over the next 18 months.
but it speaks to the equity.
It definitely speaks to the equity, and equity is what makes a housing market healthy, right? When you're paying over list price, when you pay cash over appraised value, that's your cash basis, that's your equity. And so by having that solid foundation, it's okay to do that if you know how long you're going to live in the home.
Right.
If you're going to sell the home within 2 years and you're paying more than 12%,
Probably not a good deal.
probably not a good deal.
Right.
And that's something that you need to make sure that you're talking to your agent about,
Mhm.
and making sure you understand what the relative to market is. But that also protects us from being in a bubble,
Yes.
right? It's easy to say, oh, the housing market's in a bubble, because the definition of a bubble is when people are inflating the value of an asset class, right, which is housing, at an exuberant pace, right? And so the word exuberance is used in economics to identify the bubble. It's okay to have this exuberant behavior. The difference is if the bubble pops. And if the bubble pops, the only thing that would happen is if people needed to sell their home. But again, at 2%, at 3% interest rates, nobody's selling the house. No way. And so
Not as long as the rates stay low.
yeah. Well, even if the rates stay low, people are in the home,
Mhm.
they're locked in on a 30-year mortgage.
No, I mean overall, yeah.
Yeah, overall.
That's when
And
the
so-
market will turn more. We'll get more inventory, and we'll be more back towards an even market
Yeah.
eventually.
And a balanced market, we could, if they didn't put any more homes on the market, we would be out in about 3 weeks, maybe 4, and which is tough. But we will be returning to a nice balanced market within 2 percentage points on the interest rates.
Yeah.
And that's just bringing it up to about 4 or 5%.
Which
Yeah,
is still
5%.
not horrible.
Yeah,
Yeah.
which is still cheaper than I paid the first time I bought a house, which
Right.
was an absurd amount because I'm much
Yeah.
older than Steve. So, as far as
Let's look at real quick.
Yeah.
I'm sorry. I just wanted to touch on the contingency. So when we're selling the house, and then now we're buying the house, I just want to throw a couple points in there. So if you remember, Scott talked about that being a road bump.
Mhm.
So basically, in our market, when we're faced with multiple offers or competing for a property, we want our offers to be as competitive as possible.
Mhm.
The fact that we're on a contingency is kind of like one strike against us right off the bat. So if you're purchasing, what I'm telling you as a buyer is stack all the other cards in your favor. Go at least asking price or maybe above.
Yeah.
Pay your own closing costs. Don't ask for a home warranty. Just anything else you can do that
Right.
would make that offer appealing, because you do have the contingency. So as I said, it's kind of a road bump that you have to overcome with all the other pieces of your offer. So
Absolutely.
that's just on the buy side. Anyway.
Definitely. Hey, I know that we're running up on our 30 minutes. And
So we
so,
are.
yeah, we are. And so, Tom, guy in our seat, do we have any random questions? Excellent. None of the ones we want to answer, which is perfect. Thank you, Tom.
Perfect.
So,
So let's wrap it up. Just wanted to thank everybody for attending and let you know that the replay will be recorded on my YouTube channel.
Yep.
And if hit us up on Facebook or whatever if you want to get a link to the recording. And be sure to subscribe to our channel.
Yeah.
And stay
Absolutely.
tuned.
Hey, thank you so much. Excellent.
Have a great day.
You bet.